In terms of investment allocations, investment thinking now, I guess the China market is open in a way that it hasn't been before, or at least something that you're willing to look at. Is it? I mean, are you now thinking we need to reassess how we invest in this region?
Well, we rather have. I mean, actually, China/Hong Kong is our biggest single sector geographical allocation, and we're hugely overweight for precisely this scenario. I mean, yes, there's going to be a little bit of pain over the next few months, but certainly starting in Q2, we would expect China, the economy, and also, therefore, the profits of Chinese companies to be significantly better year on year. And we'll start to see that in the half-year results when they come out in August. But most people are massively underweight. And that, of course, was a good decision for most of the last year until November. But I think it will be very much the wrong decision for 2023.
How long have you been hugely overweight?
Well, given our strategies, which are high-income equities in Asia, China and Hong Kong have been a core holding really since we started in 2001. So we tend to be overweight generally, but we are more overweight today than I think we've ever been, because we're more confident that that's the right call for 2023 than we have ever been.
Just very quickly, and we'll get into a little bit more detail onto how and why and in what context. But just very quickly, what's your asset allocation in China? Are you purely equities? And if so, do you have a more finely tuned thematic focus?
Yeah, I mean, we are allowed to do 15% bonds based on what the requirements of our accounts are. But as a practical matter, there's just no real point doing bonds in China anymore. They were a good place to be for a while, but not any longer, because interest rates at some point this year in China, I think, will start to tick up. And they have been, as you know, coming down, unlike the rest of the world. So equities is a place to be. You can get yields 2 to 3 times the bond rates in China if you have the right portfolio.
Given your investment mandate, obviously you're going to be there, but are there any points of caution there? Are there anything that's holding you back, or just modifying your investment approach?
Well, we haven't been rushing into the so-called opening up plays, because we don't think opening up is going to happen quite so quickly, by which I mean cinemas, restaurants, physical retail, transportation. Those are areas where we are actually not invested at the moment, because we think that's going to take longer to flow through than some of the other areas.